let's move into that direction. Let's talk about do you have a chart of like current stakers versus like the trajectory of the current stakers? Because I think in the shadows there are people that are still accumulating more, still staking, although they're not talking about it.
Shadowy super coders.
Yeah.
Yeah.
Yeah, we can look at the user adoption and statistics, but I think what the market wants to know is a couple things. One is that they want hexicans to admit that if you bought and staked hex the last 2 years, you're wrecked, and you've given all your opportunity cost away, and you missed all this opportunity on Pulse Chain, and so many ecosystems have popped up that would have been useful to have dry powder or other capital to deploy, and it's stuff that we couldn't see coming because there was that hive mind of hex staking long term was the only way. And that's just proven to not be true at this point. But that doesn't make hex not valuable or not continuing to be adopted or to be a good hedge or to be the good long term play. So
yeah, we don't know
a lot of the haters
yet.
A lot of the haters and the faders are just that, Ewok. Yeah. They're gonna learn in 2 years or 3 years why we were saying the stuff we were saying, and by then a lot of OG hexicans would have been staked for 5, 6, 7 years already and be capitalizing on that price run to $1 or $2 or maybe even higher. And so the important thing here to know then after that, before we go into user adoption, is the tokenomics and the yield setup on Pulse Chain. There's 3 pillars of yield on Pulse Chain. There's the hex staking, which is the GOAT, the OG. Longer pays better and bigger pays better. Then there's Pulse Chain validating, which is like the center of it's like the fulcrum on a seesaw. That's that base APR that you can get 9 to 12% for validating. And then on the other side of the seesaw is ink farming, which is where all the attention and focus and the most opportunity is currently. And so I see it as like ink and hex are balancing on the seesaw of pulse validating. So pulse validating is a fulcrum. It's the base unit to 9 to 12% APR. There's work involved with that, and you have to make sure your validator is running. And then there's the effortless, exciting yield of ink that you just get the ink, you put it, you get your money in the yield farms. You support the network and lock liquidity into it, making the ecosystem have less friction, and supporting the network and getting paid a lot to do it. And then on the other side, you have hex staking, which is long-term investment mindset stuff. And the difference is that when you look at the numbers of what a 1 year locked in some of these farms is versus what 1 year locked in a hex stake is, it's totally off balance, obviously, because hex is designed to incentivize longer behavior. So we'll look at first the 1 year. I mean, like you're on a 1 year hex stake versus 1 year in the farms, depending on which pool you're in, you're looking at like a 7 to 10x difference in yield. And so the hex is really unattractive for anything less, in my mind, than 5 years staking. And that's the mindset hex stakers need to get into, is like it's got to be long, or otherwise you might as well play these other games. Because like if you go max length 5, now all of a sudden you've reduced that down to a max length stake is paying you yearly just 3x less than 1 year in the farms. And if hex does a 3x, now it's even again, so that your 15-year stake was paying you equal amount yearly as to what the current ink price is and the current rate in certain pools on a max length stake, and so they balance out. And so what I think this is all going to lead into is the market is mispricing hex yield and ink yield. Ink may be slightly overvalued, hex may be slightly undervalued, but they're both going to go up. Both yields are going to go up, and they're just going to take turns on the seesaw, rising together throughout the bull market to find the balance or the harmony or the equilibrium of what is the appropriate ratio and what's the right amount of reward that each type of behavior should be getting inside of the Pulse chain. And then on top of that, you have to also compete with all these other DEXs and incentive structures. So it does get complexified, but if we're just looking at the RH tokens, we're seeing this rebalancing period. Like Pulse chain's been out a year. It's going to take 2 and 3 and 5 and 10 years to really rebalance all these systems out. And so you should be hedged by having a bit of each one of 4 of these coins. And you should be having, I think if you're staking HEX, you can't do less than 5 years. You can do you can do a 30-day roller or you can do 5 years or longer. But if you're doing anything in between, you're really just giving up your opportunity cost. You'd be better off in the ink farms. And this is something I talked about in Vegas at the conference, live in front of like 100 people. It was like, there's these 3 pillars of yield, and nobody knows where this is all going, but that it's all going to grow in value. And you just have these 2 sides of the seesaw, and so they're going to take turns dominating certain points of the cycle in both a bear and a bull and a bear market. I think ultimately what this does is ink is just going to go ballistic this cycle. It just makes sense. It's a good way to get people into the game. But at the end of the cycle, value is going to end up in the longer term storage. And I think that's what HEX is for. And what's going to prove it is that in HEX's second cycle, you see $1, $2, $5, $10 even, if some of this PDI narrative stuff comes online. Or if Pulse does a 10,000x, that's when you see HEX do the double-digit dollar numbers. And for any OG hexakin that did have the patience to wait, they are going to end up winning incredibly hard for staking for that duration of time, since the beginning, first couple of years till then, and forward. And so then you have to be thinking about, especially if you're young in your 20s and 30s, you have to be thinking about long term. Where does this all end? Like, what is the next bottom of the bear? Where does that sit? Is HEX at 10 cents? Is it at 20 cents? Is that 50 cents? Like, where does the bear market end? Because if that's the case, that you're even at 10 cents, you're already going to capture for your rest of your life a 10x on your HEX, plus you have the ability to mint more HEX forever. And so I think that's a very powerful thing. And only a successful second cycle will solidify HEX as a store of value long term.
Well said.
Yep. I agree.
Ewok, what do you make of his point about maybe taking to the end of the bull market for like maybe parties that aren't as interested in HEX right now, or people that maybe came in like this cycle and weren't around so much last cycle, that the long-term thinking may come into effect then? And I really like what you said, Axis, like kind of the opportunity cost of like doing sub 5-year stakes outside of, you were talking about rolling 30s, especially obviously the bigger bag you have, that would make more sense. But I think that makes a lot of sense. But Ewok, what do you think about like the evolution of the thought process there, where people, I think he's right. Like, the more we have retail back, you're going to get people into like, prices are up. So they're going to think like, oh yeah, I love this crypto thing. I want to do this thing long-term. And then they look into something long-term like HEX staking. We had other DeFi protocols with yield, of course, tons of them last cycle, but none designed quite like HEX, like that kind of smart contract. So what do you make of that idea? I think that's interesting.
Well, yeah, I mean, and Johnny brought up a good point. There was a lot of value extracted. You've got the multiplication of the whole ecosystem, so it's totally rebalancing. And all these people saying that HEX just it failed. Well, it's way too early to say that, because a lot of us have 15-year stakes that are locked out. We'll have to kind of wait and see until those are done to what the end result is. But I do feel once this whole thing is rebalanced, you are going to see, there's always going to be degen players. There's always going to be meme coins in and out of things. There's going to be some winners and obviously just as many losers. But some of those winners are going to start putting things back into what is realized as the store of value, the one that creates the yield trustlessly and no risk of impermanent loss, no risk of having to farm or do any of those crazy things. I just think it's going to take time. And unfortunately, we did have to have a reset. It all went from one side to the other side. Now the market has chosen. I still think there will be a play on both sides. We'll get back into that whole debate of EHEX, PHEX, which is better. You
want to get into that? That's a good.
Yeah, I do actually. Go ahead.
So let's finish out a thought on Ink and HEX, because they are important to distinguish. They're 2 sides of a seesaw. And so you can look at this Ink HEX ratio chart and you can see, I only got 12 minutes because I got to go hop on another call.
That's fine. Yeah, me too.
And so you can see that, look, right now, HEX is taking it back from Ink. And this is good. This means that there's competition between Ink and Hex right now. That Ink, look at Ink against Pulse, sideways. Ink against Pulse X, broken out, retesting the pennant, falling wedge, bullish, and sideways. But against Hex, Ink is starting to lose value to Hex. So the rebalancing is happening, and it's right here in our faces on this chart. Now, what about the combined Hex price? I know people hate this and fade this, but look, we just got done making a new all-time low on the combined Hex price, which was appropriate after massive brand damage was done up here for EHEX after destroying a perfect market setup. I mean, this thing, EHEX was looking amazing for continuation. It actually had busted up to 1.4 cents and had just started to tap into the BankX wall, and I mean, this was looking good. I mean, there's a shitload of people trading this on the ETH chain, like excited about a run to 3 to 5 cents, and it would have went. And then Richard fudded it. 4 whales stepped in and crashed it, and here we are, right? But that doesn't mean that it's not got value, or that I think it was important to get the liquidity across to Pulse chain, and that we're trading over here because it supports the Pulse chain is the place to trade narrative. And since the lows here, again, in Pulse terms, EHEX is looking tremendous. It's up off the wick low here. It's up 246%. You could have gotten 3.5x your PLS stack if you would have caught this wick low. And even if you caught the double bottom here, you could have been up 2.26x your Pulse stack by buying EHEX this time. And the Tropa deployers buying it. Some of my whale buddies are buying it. Like this is not done. EHEX to, if PHEX is going to go to $2 to $5, or PHEX can go $2 to $5, I don't see why this coin can't go to 2 to 5 cents or 10 cents. That's from 0.0014 to 14 cents is 100x.
Crazy.
And so the opportunities here as well, and it's always going to print more hex. So I mean, okay, this is good for its own reasons. It's riskier, blah blah blah. We don't know when gas fees gets fixed, blah blah blah. But for people with bags, this was a play to make. And then in terms of PHEX, I mean, this thing is amazing. I was live with Crypto Coffee. We were talking about this falling wedge and the ratio of PHEX versus Pulse, and it was range bound down here. And I was like, this thing's going to break out. And then boom, we broke out just days later. And now today, we reversed the bearish action, and we just went and tested the 618 again. This thing's going higher. PHEX is going to gain on Pulse here anywhere from 15 to 30% more against Pulse in the coming days and weeks, coming off this massive falling wedge that spans all the way back to August of last year. We've been in this structure for 253 days, and these things have power. And I mean, I think ultimately Hex is going to try and go up here and make new highs, which is at least 60%. Like, I mean, you're looking at 15, 30, 45, 70% on the way back to the highs. So, I mean, that's in Pulse terms. So do not fade the hexes, because once they're like 3 and 4 cents, dude, they get super expensive. Like the market cap goes back up quick for Hex when it gets moving. And, we've been saying don't get left behind for years, but in this case, I really do caution you not to get left behind. It's just so out of favor.
It definitely is not a favor.
And the price of the T-share, the T-share price as well. I mean, not even looking at that, it can explode quickly. Isn't there some large stakes that are coming out soon that will probably increase that T-share price?
I don't really watch that too much these days because of the inflation and the people that are staking, they are affecting the T-share rate a little bit. And how about this? How about Crispy and I come back on with you guys soon, next couple weeks, and we'll do a whole Hex deep dive. How about that?
Sure. Sounds good to me.
Because I mean, this is
it's
getting
too deep
to the point
for what, 7 minutes?
7 minutes. Yeah.
I don't think we'll fit it in. Yeah,
I hear you.